And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 future on Monday, May 17th, 2021. We continue to count what is best interpreted thus far as an intermediate fourth wave correction. And I am going to go, and I didn't do it quite yet, but I am going to put that intermediate wave 3 here. So the completion is here, intermediate wave 4 underway. So I really would label this as wave A. And this, I believe that I'm going to leave it open for right now, but I'm lending a lot on the fact that I think that this completed wave B, and that what we're now doing is dropping into C wave. And these I actually attached last night or yesterday during yesterday's update, and I'm leaving them there. We do have the possibility where we could have an upside swing, and it could get intense and it could end up being an irregular. And I will put that in as soon as I work through what my expectation is going to be initially for tomorrow. I think that the market should hold below the current highs that we've seen here in Globex at 4162.5. Once again, the S&P has gone to what I am looking at as its safety zone. For whatever reason, 4160 up and down a little bit has become the safety zone for the S&P. It'll zip down, then but it comes back. It zips up, but then it comes back. And so that's where it's sitting right now. And I would think that the market again starts to turn, starts to break below the 50, starts to break below the 200 and then the 50 and start heading back lower. We have first support at 429, 4130. That I thought was going to be reached today, got close, got down to 3650. So that would have to break. And I don't think it's going to have a problem once this wave is announced. And it again is going to be, if this is wave 1 of C, this is wave 2 of C, we're looking at a 3 of C. So third waves, on top of it being a C wave, it should accelerate a little bit. What's going to drive it? Who knows? You know, what drives the rallies? What drives the different things? There's a myriad of information being tossed. I'd rather just be prepared and be accepting of what the market is telling me at the time so that I can continue to trade. So that's why we'll keep working with our moving averages and be looking for these levels to more than likely break and start to point lower. And then we'd be looking for the market to continue to drop. Now, wave C is going to be related to wave A. So what the most common relationship is, this is wave A, this is wave B, wave C is going to be related to wave A. The most common is that C is equal to A. That comes in at 3,969, 3,970. That's the zone right there. And more common is down here, 1.382, 1.618. Now, if I take this up to the daily, I want to see something. I've got some Fibonacci's. We've got much bigger Fibonacci's running. And those I am going to, that's for once this larger move is done, what we would be looking like if that is the completion point and the S&P is just going to fall off the realm. That would be starting to come off to those levels. I'm definitely not looking for that. In fact, I'm going to take them off. And those will be the retracements. So let's get rid of those retracements because I want to replace them with what is more in line with, that's the A, that's the B, and then we're going to have this fourth wave down. And that's why I went out to here. And if we were to, what is it correcting? It's correcting the intermediate. This is an intermediate 3. It's correcting the intermediate third wave, which began way down here. And that would suggest that we definitely should be getting down here. Let me go back to Fibonacci retracement. And come on. You know, it just puts us around and goes, well, you got people waiting for you. So I'm going to go to 4,038, 38. A little bit. Okay. So what we got going on is that 236 comes in here, and that's 1.236 because that's a zone. 39.70 is a zone down, and it's going to be a 50-point zone. So let's call it down to 39.25 down to 39.20. So it's either going to be a 35-point zone or it's going to be a little bit larger. Next zone is 3,040. Then we have another convergence here, but that's a pretty big slide. You got the 50, the daily 50, you've got 0.382, and then you've got a 200%. All are really possible, but I'm kind of looking up here. They want to buy these markets, folks. It does feel that way. I don't know if everybody else is feeling any different or the same. This was sharp, and it really took from Sunday. It was a week, and it took less than a week. It took 4 days to get down to there. Sunday, Monday, Tuesday, Wednesday, Thursday. 4 days. If you can stretch it, maybe 5, but it basically was 4 days. So for 4 days, by Friday, we're down there again. So that's kind of what I'm looking for, to go down. If the market should start to go up and break above 41.80, then we have a much different extension deal going on. And what I'll say to that is that we would then be looking at wave A, wave B, and it's going to do a C wave up. So again, we want to use our Fibonacci extensions. We're going to draw them from there to that high. Is it that this high? But it's about the same. All right, so and then down to today's low, which is 36 or 35, I believe. And so now you begin to see that we've got some pretty big high numbers. So this entire B wave, if this is wave A and this is all going to be wave B can get itself up to 0.618, which is going to be where wave C would be 0.618 of wave A, and that's 4,228, almost to the very tippy top, 10 points away. So can it do it? Absolutely. But if it starts to continue to break, it can, B waves can go to new highs, but then you're looking for at least 4,286, if not 4,321. So the 4,300 number remains in play, and it's corrective. And then a crushing C wave would be expected. Now, I'm hearing from some others today that kind of fits what a lot of people are looking for. That we get up there, that we may be reaching a high that could be for a while, and then we're just going to really see a really slam dunk. And that would definitely provide a slam dunk and still leave open all possibilities for an additional all-time new highs to be created once it's complete. My count is telling me that it is an intermediate 4, an intermediate level 4, intermediate degree 4. If I have to take it up, it's only a primary 4. And I don't think it's that high, but an intermediate level for certain we can go up there. For certain can go up there. So if this thing starts to break, we've got upside numbers that fit and that work. And this one would be the most common. And it still would not create a new high, but it would make it more of an ABC flat. And we'd be looking for another trip back down to here a little bit lower. But likely above 3,000. I have a number that comes in at 3,990. That would fit gloriously. That was off that other Fibonacci that we had. So we have upside marching orders, we have downside marching orders. We're going to let the market tell us what it wants to do and how it intends to do it. So we have our Fibonacci levels, and you can see how I drew them. Boom, boom, boom. We're counting of C. C's relationship is going to be to the wave A. Now we can put all that in, lickety split, and you're not doing it with a calculator and trying to figure it out. So here you do this stuff on the fly. If you need a larger downside move, in other words, that this is A, that's B, and now we're going to go down in C, right? Which under this count comes later. Under this count, it's happening now. So if the market turns and starts to break down and goes below today's low, that's going to open up that door for us, and we'd be looking for a little bit of acceleration. So again, you draw your extensions, and here you take it from the all-time high. Take it from the all-time high. Come on. Thank you. That didn't work good. You take it from the high and you put it down to that bottom of that fifth wave. And then you bring it up to here. So there to there to there, and you've got your downside. And we had 3,992, I believe, or three, and then a zone down in here, and then further zones lower. And that would be also extremely plausible, and then still have a fifth wave rally to new all-time highs. So there's our marching orders. So I think that if we do have continued upside, I'd be looking for that 4,228. I think that that's not unreasonable. Now, whether the S&P wants to go up there all in one swoop would be about 65, 70 point move, pretty high, but we'll see. We'll see what it can do or what it wants to do. Let the market tell you. I'm going to leave it there. Next update is on Tuesday, May 18th.